Welcome to Buy, Hold, Sell. Today we're talking about defensive income stocks. I've got John Ayoub from Wilson Asset Management and Daniel Moore from Investors Mutual. Welcome, gentlemen. The group that we're looking at today have got a yield that's a bit above the market and have got some defensive attributes to those earnings so they can keep on delivering. Scentre Group, high quality portfolio of retailing assets. Buy, hold or sell?
It's a short-term buy. Buyback supporting it. Retail foot traffic is improving. Structural headwinds aren't going away anytime, but for the moment, it's a short-term buy.
Okay, it's a buy there. Scentre Group, very high quality shopping centres. Buy, hold or sell?
It's a sell for us. Rents have been growing faster than retail sales for a long period of time because Westfield's had the balance of power in their, on their side, and that balance of power is shifting now because vacancy is rising. So we see downside to rents medium term. So it's a sell.
Okay, it's a sell there. Tabcorp, buy, hold or sell? Gambling, sustainable business, buy, hold or sell?
Yeah, it's a buy for us. We love the lotteries business. We think that's one of the best businesses in the market. Long-term licenses that go for decades. Really like the growth coming through on the online side of the business. And on the wagering side, which has been competitive, there's a lot of consolidation going on. So there's hope that that part of the business will improve.
Okay, are you as bullish as Daniel on Tabcorp, buy, hold or sell?
I agree with Daniel from the lottery perspective. It's probably the best business in the Australian market. However, it's a hold because the wagering headwinds aren't going away anytime soon. They've done a fantastic job from a regulatory standpoint, but at current valuation, it's a hold.
Okay, Spark Infrastructure, regulated assets, buy, hold or sell?
It's just a play on bonds. For me, some headwinds are going to come for their earnings in the outer years. It's a hold. Can't get excited.
Okay, can you get excited about Spark then?
No, I'm the same. It's a hold. We see the dividends probably going to get cut over the next couple of years as the regulator resets their rates to lower bond yields. That's partly reflected in the share price, but it's not quite there yet for us to have a buy.
Okay, well here's your chance. Have you got a stock with a decent yield, sustainable earnings that you like to look of today?
I do. Amcor. Amcor is a buy for us. The stock's trading around 15 times, yield close to 5%. People are really worried about plastics and when you do the analysis, we think that's overplayed. Less than 10% of their revenues we think are exposed to sort of PET, and we think there's good growth over the next 2 or 3 years from the synergies from their Beamers transaction they've done.
Okay. Have you got something with an above par yield and defensive earnings for us?
Look, I'm going to suggest something out of the norm here, and I'm going to say Macquarie Bank. Now, 4% yield, have demonstrated that they have an ability to make money through the cycle no matter what, and you look at where all their capital is going today, it's into those infrastructure style assets. So I think this is a stock that's going to be considered a yield stock going forward.
Okay, well when you're looking for your defensive yield, you've got to go just beyond the headline number and find the companies with a decent outlook as well.